Thank you very much for attending LCG's weekly market analysis webinar with myself, Jasper Lawler, the senior market analyst here at LCG. You should have had plenty of time at this point, I think, to read the risk warning on the screen. So I'm going to move forward from there just to a little slide that I'm not going to harp on and on about, just to give you a little idea, a little taster as to, kind of fundamentally what's going on this week. This webinar is mostly about tackling the charts, but obviously good to know what's going on in the background. So these big themes, these typically don't change too heavily week to week. I've added in at the bottom, which I think is interesting today, is Chinese government stimulus. So those are the ones, for those of you who appeared before, you'll be familiar with the Trump reflation trade, the Fed rate hikes, other central banks tapering QE. Particularly the ECB is going to be now in focus because, on the assumption that Marine Le Pen is not going to win the French presidency, that existential risk to the euro is now gone. Inflation is rising in the eurozone, in fact above its 2% target, so now the ECB need to get on with doing some tapering. So now ECB tapering is very much more on the table. If there had been a different result on Sunday, and Marine Le Pen looked like she had a good chance of winning the final round in a couple of weeks, then actually tapering would be more off the table in the ECB. So that's something to keep in mind, very much so. Obviously, we've got the general election here in the UK. Caught some good moves in the pound last week. We'll look at the pound. Got more European elections, obviously the second round of the France elections and German elections later in the year. And China, yeah, as I said, Chinese government stimulus is notable today that pretty much every equity market's higher except China. China there, it's something that sort of applies to us in our trading when we're using leverage to place our trades. In China, they're clamping down on leverage a bit, so it literally is a physical impact on how much people could trade, how many shares people can trade at a time. And they're trying to clamp down on leverage across the system, not just in financial markets, but in bank lending, etc. So they were stimulating their economy all of last year, China. That certainly helped financial markets, in my opinion. Part of why we were able to bounce so easily from those lows early in the year in 2016. And now it looks like they're ratcheting that back. So that eventually could have some negative consequences for equities and other markets. We're not seeing it yet, obviously. Today it's all very much risk on. French election risk, well, we've talked about it a bit. In a way, the risk has disappeared, and there's lots of measurements of risk. The volatility on the euro, that's come right down. So basically, the implied volatility is all about the options market. How aggressive are people being on placing puts versus call options? How much protection are they trying to get in on the euro over the next 3 months? Well, a lot less as of today than it was Friday. US earnings season. There's a lot of earnings. I've read somewhere 190 US companies reporting this week, a good number of S&P 500 companies. If you want to see the whole list, then I would suggest having a quick read of our week ahead report, as I mentioned at the bottom here. Donald Trump tweeted that he's going to announce a massive tax cut. I think that's part of the reason for the relief again today. Obviously, we've got through that French election. Now we can turn back towards the US, and the language is looking a bit more positive. Maybe those tax cuts don't come in till even maybe 2018, but being on the table shows the agenda is there, and markets can look forward to when they're actually enacted. And then we've got central bank meetings this week from the ECB and the BOJ. We're not really expecting much. But as we said, the ECB needs to start addressing tapering. The yen has been strengthening against the dollar. We're getting a bit of a rebound today because yen typically a safe haven. So the yen getting sold off. There's not as much need for a safe haven in a risk-on environment. But the closer the dollar yen gets to 100, the more worried they are going to be about the negative consequences of a strong yen. Obviously dollar moving up, yen moving down. So we're talking about a lower dollar yen means a stronger yen. They don't like that, the Bank of Japan. So that's when we will probably start seeing some more action from them. Probably not this meeting this week. And we've got UK and US growth data as well, so that will obviously be important in the context of what Trump's doing and how Brexit's going to affect the UK. Seems like we probably had a bit of a slowdown in the first quarter in both economies. So moving swiftly on. So last but not least, by any stretch, we're going to start with the euro here. We highlighted last week this inverse head and shoulders pattern. It's worked out pretty beautifully. Like, you don't often get the gap move higher to your intended target, but that, you know, that's what happened this time. So those of you who are able to kind of weather the storm of this decline, obviously some election jitters at the tail end of last week have been completely wiped out and more, and we're going to look at the highest levels this year with levels above 109. So this is a 4-hour chart. If I zoom out a bit, we can see things a bit better. This was the context of what we were looking at, that big run higher. We made a new high. That made us a little bit confident that actually, you know, maybe the market was bottoming out. We came down with a sharp retracement. Didn't work on the 61.8. We were looking at opportunities there. Didn't work. Did on the 76.4. That's where the market eventually turned around. And then we got this nice little reversal pattern, which, with the benefit of hindsight, which we did mention at the time as well, to be fair, has worked out pretty well. Again, you know, it's a test of your trading's never straightforward. Definitely a big test of your resolution that the breakout was going to continue here, because you see this little move. I believe that was on Thursday. The market pulled right back, and it was on the 61.8. If I delete this and add in a new fib, is it going to do a nice one for me? Yeah. You could see anyway, yeah, pretty much on the bang on the 61.8 retracement of that move lower. So obviously a few people selling in. Chance Marine Le Pen did well. Obviously that was eclipsed, and the reversal pattern, the longer term shift in momentum higher, has won out. So what do we do from here? Well, obviously you can see the market's kind of pulled back to this 76.4% fib level, kind of in line with these other highs as well. If I delete this, to us this is all a bullish environment. Of course we can get steep pullbacks, but in terms of the longer term environment, for the reasons we mentioned in terms of possible ECB tapering, for this technical breakout that we had here, a pullback into the range, now a move even higher again, all kind of looks quite positive for us. There's a pullback here, but naturally a large gap like this, you know, you would probably expect it to get filled, and I wouldn't be surprised to see the market trading back down in the sort of 108s, 107s vicinity again. But to us, the general shift seems to be higher. You can even draw a trend line down from the lows here, which kind of shows a kind of gradually rising market. Potentially this was a triangle bottom which we're in the midst of breaking out from. Of course there are false breakouts, but to us, trade the probabilities, you know, it's looking quite decent at the moment. If you're looking for a slightly more cautious entry, I would say midway through this gap, or just right down at the bottom of the gap, wait for the gap to fill mid or full for opportunities lower down. But just really this peak in itself is, you know, possibly where a few people are going to jump in. A few messy lines here on the, I'm using a different computer again for this webinar, so it didn't update my lines, but c'est la vie, as they would say in France today. This is kind of the resistance area here. This was a little false breakout. Tried to use the kind of the candles without the massive tails. So, you know, somewhere within this vicinity is, you know, is where the market's kind of pulling back in the pound. This obviously was the announcement of the general election surge. And just to explain this quickly, I mean, you may have read my reports, my take on this anyway, but I think it's just sort of generally understood that a Tory landslide is pretty likely in this election. You know, whatever your political beliefs may be, I mean, we try and keep them separate from trading, but I think it's quite well understood that Jeremy Corbyn is not popular amongst the general public. Got a very key set of Labour support that win him the leader of the opposition post, but in the rest of the country, he's not going to get that opposition, particularly with Brexit, when it's all about the strength of the leadership, the perception of strength. Theresa May has done quite a good PR job for herself, putting herself off as a strong leader. Jeremy has not quite managed that. So likelihood is there's going to be a big Tory victory. Historically, Tory government's better for markets, and the idea is that as far as Brexit, Theresa May won't be as reliant on some of these these more like extreme Brexiteers. She can take a more maybe softer approach to Brexit and still win the majority in Parliament whenever a vote is needed. Hence, the market's pricing in a softer Brexit now on the back of the general election. And again, this is consistent with the euro, right? We're seeing a bit of a kind of general topping in the dollar and a bottoming in some of the other major currency pairs. And this is the pound breaking out here. Again, I wouldn't be surprised to see a pullback down to this kind of triangle pattern that was coming through here. Depends where you want to draw the highs, maybe into this vicinity. That would be about 126.50. Maybe even, a nice thing I like to try and do is, if I am trying to go for a larger pullback, is just look at where look at the daily breakout candle in this case, which is quite large. Look for a 61.8 or even a 50% pullback. So that 61.8 lines up quite well with this sloping trend line. If you're going slightly more aggressive than that, just add in the 50, and you've got some potential areas where the market could bottom out down here. And that's 127 and change. So obviously, typically the big money orders come in around the round numbers. So we're basically looking like we're breaking out of ranges here in the euro and the pound. It can be difficult to catch these breaks, and there can be big pullbacks, but if you keep the general mindset involved that directionally which way you think it's going, to my mind it looks like this the market's moving higher. Maybe you think it's a false break, but as long as you keep that mindset in mind, then you can take advantage of the opportunities. Waffled that a bit, but I think you know where I was coming from. So this is dollar yen. We basically jumped back above 110. We'd suggested this in our daily market reports last week. The trend is still down in my mind. Look at these moving averages. This has been lower highs, lower lows, consolidation, lower highs, lower lows, potentially now back into another consolidation. 110 is a big level. To my mind, I don't particularly see, obviously got 108 just below where we bottomed here. To my mind, I don't really necessarily see why 108 should be a big level. You could argue the weekly moving average, but I think it hasn't worked especially well. It's been quite supportive in the past, I suppose you could say. So obviously always a chance that we've seen the lows, but to my mind the trend is still intact at the moment, and this is to me a pullback within a downtrend. So we've got back above 110. Now it's just a matter of whether we can follow through. Some evidence that maybe we are starting to already today. We've got the Bank of Japan this week. So theoretically, if they do nothing, that's obviously like kind of neutral for the market. But then if you think about what they could do, I think any action they would take is unlikely to be tapering. They've not really mentioned that at all, tapering the QE program. If anything, they could change their yield target on the 10-year Japanese government bond to below zero, perhaps, to make life a bit easier for them, or to above zero because inflation's picking up a bit. If they did that, that would be a dollar-yen positive event. If they kind of adjusted their yield curve to the adjusted the yield curve higher. They have a target on the 10-year government bond at 0% right now. If they move that higher, that should be a dollar-yen positive event, and that could be enough to switch this downtrend to the negative. Overall, though, we think that this kind of dollar divergence trade is kind of losing steam a little bit at the moment. The Fed may be choosing to shrink their balance sheet instead of tighten rates a lot more, and the dollar's more focused on the rates. So over to equities. So if I draw another little support through here, you can see where we're at on the UK 100 quite nicely. We broke through that 7250 support, and now we've rebounded straight back to it again. I did highlight in the week ahead article, we're going to get the videos going again hopefully this week, by the way, but in the article I did mention this 7065 level as quite a significant support, and we have had a nice rebound from there, so that's working out quite well. But if the moving averages are crossed lower, we're in the midst of a pullback, and there's some good evidence that it's ended now, in line with the longer term trend. Keep in mind when you're trying to sell this market, how far we've come, and every time there has been what looks like a bit of a sell-off, it's just been a buying opportunity. So keep that context in mind when you're trying to pick the top of the market. That generally any attempts to wait for a big sell-off have failed pretty miserably in recent times. And also when you're looking to sell the UK 100, okay, maybe there is a reason that would underperform other indices if the pound is going to keep going higher. But if these other indices are moving higher, there's only so much lower the UK shares can go down when every other global benchmark's moving higher. So this is the Wall Street chart. I like this, using that first peak there and that second peak there. I consider that a little bit of a kind of false break through the trend line, and then if you use this peak through here, you can see that we're just poking above a confluence of potential resistance here. Looks like this correction has pretty much finished in Wall Street. Price back above the moving averages, above that resistance for now at least, above that trend line. Obviously, I think probably where we're struggling at the moment is if you redraw the trend line like that. But to my mind, and again, based on the general bias of the market, I'd be assuming that this correction is pretty much over. You could even look at RSI down here, and we seem to have a bit of an evidence of a bottom. Germany 30, as I mentioned, we've pretty much tiptoed. I've had this chart on my this level on my chart for a while, the 12,409. We've just peeped above into record territory. So if I show you the weekly chart, you can see that better over there. Obviously a massive resistance level, but we've already pulled back from it once. So good chance that this is the one that can carry us forward. Of course, we can drop back from it again. We've had a big uptick in a lot of these markets today. The French CAC, which I'm not going to show on here because it's a similar kind of move to the Germany 30, is up close to 5% on the spot prices. So it's quite a big one-day move. Wouldn't be surprised to see a pullback, but to my mind, the evidence would suggest that we've had a little tick back from the record, and now we're off to the races. Where do we go from there? Well, it's tricky when you're in record territory. Fibonacci extensions, or to me, just keep it simple, the round numbers, that's going to be logical profit-taking areas. So from here, 12,500 obviously would be somewhere that maybe the markets pull back from. Brent, a tricky one. We had that nice little double bottom. The market reached this other peak, and has pretty broke through that little area of support and has just dived, and not even found resistance at this old double bottom support area. Maybe has, if you call that a false break, and you're looking at these highs, stabilizing a little bit there, but did break through this peak. This little bottom process didn't happen, and we'll drop lower again. So I'm not overly negative on the oil market. I just don't see the big bull breakout happening yet. But on May 25th, so pretty much a month from today, we have the OPEC meeting. If they extend the cuts, that should be pretty positive for the oil market. I wouldn't be surprised to see Brent top 60 at that point. But at the moment, it's not entirely certain that Saudi Arabia believe that cutting output some more is going to do anything but just hand over the market share to the US. So you can't really spot a trend in this oil market at the moment. I'm kind of opting to stay away from it. If you are a dedicated oil market trader, you know, I'm just looking at this kind of zone of support as a possible area that the market could turn around. And if it does, no reason it can't get a good bounce, because we're not really in a trend. We're just kind of in a sideways market trying to find ranges. That said, if we do take out these lows down here around 50, then I would say at that point maybe all bets are off and we're heading back down to 45. That could be a good opportunity, but we're not there yet. Last but not least, gold. We mentioned gold in our election special as one of the markets to watch, just because, like the yen, it's a safe haven. So naturally, we're seeing gold pull back a bit today because, you know, everyone's buying all the risky assets like stocks and the riskier currencies. So we're pulling back to these old peaks. Also, the 20-period moving average. So potentially an area this correction ends. I would imagine, you know, again, even looking at the kind of momentum here, we haven't closed the day yet, but sort of using maybe this line or this on RSI. I like to draw little trend lines just to kind of match up with what's happening in the price. Sometimes these RSI trend lines will break before the price does, give you a little clue as to where the price is heading. So at the moment we're kind of above those price equivalents, but the momentum is heading lower. So again, the trend is up, so don't try and, you know, predict something that's not happening, but to me it looks like we could be in for a slightly deeper correction here in gold. Nonetheless, if we see a reversal in the short term to the upside, you know, it could be worthwhile. So that is it. I just panicked for a second because I saw someone saying they couldn't see my charts, but I assume everyone did see my charts throughout the duration of this webinar. And I did cover gold for you, David. I hope that's all right. Should I be able to see your charts? No, I think, yeah, I was purposely showing my charts, so yeah, that's all right, Thomas. I'm good to go. Well, thank you very much for attending, everyone, today. Enjoyed having you here. Good luck for the trading for the rest of the week. There's going to be plenty of UK election chatter. We've got two central bank meetings, a whole flood of US earnings, Donald Trump on Twitter, so should be a fair bit of volatility. Hopefully should be some good movement, especially if these equity indices can continue their breakouts to the top side. Same with the euro, same with the pound. So lots to be getting on with, but I will be in attendance at the same time next week, next Monday, so please join me then. Cheers, guys. Jasper signing out.